Welcome back. You're still tuned into Midcap Radar on CNBC-TV18. Well, Kaynes Technology IPO has opened today. Issue size is 858 crore rupees, which is a split of offer for sale and fresh issue of 530 crore rupees as well. Mr. Ramesh Kunhikannan, who's the managing director, and Mr. Jairam Paravastu Sampath, who's the CFO at the company, is joining us now to discuss the outlook and the idea about the business as well. Gentlemen, good afternoon. Thanks a lot for joining us today on CNBC-TV18. Mr. Ramesh, let me come across to you first. You have a couple of reasons why you're raising funds this time around. This one is for setting up of subsidiary. Some of it will be used for certain borrowing payment. There will be something used for working capital requirement as well. And 99 crore of capex will be used for existing manufacturing facilities. First, on the borrowings, will you be able to get to that net debt zero level after this particular fundraise? And what is the outlook on the capex? You are incurring around 100 crore rupees. Is it for capacity expansion?
No, we will keep the debt level at around 50 crores. The whole idea is we wanted to leverage with the bankers because going forward, the business is going to multiply. Today, it is India's turn to get into manufacturing. We have large order pending. We have around 2,250 crores of order pending, and we also have a lot of new products in pipeline. So I will not be able to make the net debt to zero. Second is 100 crores we will be using for both the factories to upgrade it to the next level of world-class manufacturing. We are also coming out with a new factory near Chamarajnagar for 130 crores.
Okay. Sir, almost 40% of this IPO money will be via an offer for sale. Could you tell us the reason, Mr. Sampath, for that? Why is it that the promoters as well as the investors, some of them are looking to reduce their holding?
It's a requirement to come to a particular level of dilution for the promoter. So instead of waiting for 3 years to do that, we thought we'll comply it in the year one. As far as the investor is concerned, only half of their holding they are redeeming with this IPO. The remaining, they stay invested.
But Mr. Sampath, the requirement is to come down to 75% stake. With the offer for sale and, the fresh issue, your promoter holding will come down to much lower level, 63%.
Yeah, little lower. So the idea also is that all the proceeds have been invested by the promoter into the company for last 34 odd years. So just a little bit wealth creation for the promoter too.
Okay. All right. So in that case, let's talk about business as well now. You have around 50% exposure to European markets as a part of your total exports. Wanted to understand how is all that is happening in the global markets or in Europe in particular impacting business, and what portion of your raw materials are important? Mr. Ramesh, that is for you.
See, our export inquiries are increasing because we are having all marquee names as our customers, and whatever they make for the India market, we also export it. So it becomes natural. As far as the hedging is concerned, we are almost 70% naturally hedged, 30% hedging we are doing. When it comes to raw material, 70% of our sales is raw material, and in that we have around 40% as our imported material. So this is the situation.
And you are completely hedged against the fluctuations that we've been seeing in currency this time?
Yes.
Okay.
Just to understand the business a little bit more, you've got a revenue contribution coming in from various industries. The highest is automotive at 34%, then industrial at 30%, railways is 10%, medical is 10%, consumer is 8%, IoT, IT and others constitutes about 5%, while aerospace, defense, nuclear is about 3%, just for the benefit of our viewers. Could you tell us which of these segments is seeing the maximum traction, base effect apart? Where is it that you're most optimistic about? And can this mix change going ahead? And how will it change?
The next 3 years, we have a crystal clear clarity. It goes up by 1-2%. Otherwise, the series will be automobile, then industrial, thereafter railway, and then comes aerospace and defense. We are also trying to put a team together to find out how we can increase the medical business. As of now, it is a little low for us.
You're trying to figure a deal? Are you looking at some sort of a strategic partnership, a tie-up, an acquisition?
We are trying out with various options. We have not yet crystallized as far as medical electronics is concerned.
So how much does medical electronics constitute? What is the opportunity there that you're trying to tap into? And how much would you like it to contribute?
For that, we have to look at global market. If we look at global market, we can easily take it up to around 8 to 10%.
And currently, how much does it contribute, medical electronics?
For us, as of today, it's around 1%.
So you want to raise it from 1% to about 8 to 10%
Yes.
based on the opportunity?
Idea is to bring the automobile to around 30%, industrial to around 30%. Railways, we wanted to take it by 2%, like that. So railways will be up by, instead of 10, it will become 12%. And then medical, we wanted to take to 8 to 10%.
Okay. Mr. Sampath, some of the proceeds will also be used for repayment, prepayment of certain borrowings. Could you give us an indication of your long-term plans on the borrowing front?
Yeah. So currently about 180 crores of borrowing is there, out of which 130 crores will be paying off. So we'll retain about 50 odd crores of borrowing. Going forward too, the current level of money that has been poured in is sufficient for FY23 and probably part of FY24. We'll also be generating cash, but we'll also have to worry about or plan for further capexes as the existing capacity that is being built gets kind of consumed. And so going forward, we might leverage the balance sheet a little bit, but not to the extent that we are today. And so maybe from FY25 onwards, we may have a situation in which the sales numbers may deserve some borrowing too. As you know, currently our order book is at about 2,200 crores, which is like 3 times the size of last year. This has to be delivered in about 1.5 years' time. And as you know, this order book is growing month-on-month basis. So obviously we have to keep ourselves ready for taking some debt to fund working capital. CapEx, of course, from our internal resources, we can fund CapEx in terms of at least the margin money for that. And again, some term loans, etc. So right now, 250 crore will go into CapEx. Maybe FY25-26 timeframe, we will reconsider this depending on the orders that have come in. And we may have to add some more CapEx after 3 years.
So FY25-26, you could consider leveraging your balance sheet in order to increase the capex, right?
Yes.
Okay. What, according to you, a lot of our viewers are listening to you for the first time, Mr. Ramesh, and they want to understand more about the company. If you had to tell us what would be the biggest opportunity for you right now, what could go in favor of the company, and the biggest risk as you see it right now, what would it be?
As far as the opportunity is concerned, today, whatever we have gained with the market, we are able to get too many RFQs and we are able to attract more customers. The risk what I see is today we should not have any war between China and Taiwan. Any such things only can take this company into a different route. Not only this, I feel today another 10 companies in the electronics manufacturing space.
So sorry to interrupt. If suppose things get sour between China and Taiwan, could you tell us how will you get impacted? What percentage of your components get imported?
Even if it is lasting only for 1 month, 2 months, there is no problem. But long term will have an impact because most of our processors are made in Taiwan. Some are reprocessed in China. So it will affect our business in a big way.
Okay. All right, gentlemen. Thanks a lot for joining us and taking us through what your business looks like, what these proceeds will be used for, and explaining to us what the process flow is like. Thanks a lot for joining us. That's the new kid on the block, which will be listed by the end of this month. For now, we'll slip into a short break now and put focus on a host of companies which are reacting post their quarter 2 numbers. Stay tuned.